Oriental Aromatics to our investor community. So I welcome you and I thank you in these trying times to take time off and come and spend some time over here. I hope firstly all of you are home and staying safe, and I'm sure that these difficult times are going to pass soon. Very quickly on Oriental Aromatics. Oriental Aromatics was founded by my grandfather in the year 1955, along with my father, Anil Bodani. We primarily started off as a fragrance, flavor, and natural essential oil distributor for several companies in the south of France. Moving on in 1990, I joined the business, did a short stint at Grasse in perfumery, like my father did in the 70s. And the journey since then has been a very exciting, phenomenal one. And interestingly, my brother and I, being the third generation in the business, are as passionate about the business as I think my father and grandfather were. Very quickly on some of the key milestones of the company, Oriental Aromatics has been primarily a family-owned flavor and fragrance company. And in 2008, we acquired a public listed company called Camphor and Allied from the Dalal family. And it was a new step for us in the chemical business because we've primarily always been a flavor and fragrance company. 2008, when we acquired Camphor and Allied, it was a 100 crore company with a 50 lakh EBITDA, with two beautiful facilities, one in Bareilly and one in Baroda. And we decided that we would give the chemical business a very serious attempt because it was backward integration for us from the flavor fragrance to the aroma chemical business. And of course, we have another vertical which we got with Camphor and Allied, as the name suggests, which is camphor and its ancillary products. Now in 2008, when we acquired this company, being a public listed company, we wanted to give ourselves, enough time to see what we could do with the business. And in about 3 years, we were able to turn the company around and make it profitable and make it, in terms of revenue, multiply about 2 or 3 times. The other big milestone that we set forward to do was that, we always used to get a lot of feedback from our investor community, who we've been very shy of approaching and talking to, as we were not ready with what we wanted to do in terms of where we were as a company then. And we had been always told that we should, in the spirit of transparency and corporate governance, we should have one entity, we should amalgamate it, and we should, bring everything that we do out in the open. So my brother and I took a decision and we amalgamated Oriental Aromatics into Camphor and Allied. And the amalgamation went through very successfully, as you know, taking my brother and my shareholding to 74.1%. Following this, we decided that we would split our shares and give a bonus to our shareholders, and which also was successfully implemented. We then continued to build on the fragrance, flavor, aroma, chemical, and camphor business. And while I mentioned that we grew as an organization, we took a lot of key decisions in some of the molecules that we were making in Baroda and in Bareilly. And we expanded our capacities, which we will answer a little later in this call. Moving ahead, we realized that we had a good handle now on the chemical business, and Oriental Aromatics, which is what it's called now, was primarily a high volume, low value manufacturer of materials. So in 2017, we decided to talk to the Satoskar family, which is Parag and Anita, and we decided to acquire Aerofine, which was a very interesting small but yet heavily R&D and technology driven company that had approximately 150 different specialty aroma chemicals. So we were very interested in expanding our aroma chemical range as the flavor, fragrance, and aroma chemicals, specialty aroma chemicals used in the flavor and fragrance business runs into multiple thousands. Having successfully having successfully acquired Aerofine and having brought the Satoskar as part of our key management team, we're very proud to say that, 12 years after we acquired Camphor and Allied, we've moved from a 100 crore company with a 50 lakh EBITDA to now a 750 crore company with a 125 plus EBITDA. This brought in a lot of new dimensions in terms of what we wanted to do with the various plants we were running and with what we wanted to do with the additional expansion that we were in process of implementing and scaling up all the Aerofine materials and adding new materials to our palette. Today, I'm very proud to say that Oriental Aromatics operates over 3 manufacturing sites, one in Bareilly, Baroda, and Ambernath. We have a fantastic state-of-the-art R&D specialty aroma chemical laboratory in Powai, and our head offices are in Mumbai. We have a team of 1,600 employees, and I'm very proud to say as an organization that in this crisis time, management and us, we've decided very strongly that we do not believe in reducing our workforce or reducing our salaries, because we believe, and we don't run our business quarter to quarter, and we believe that if we don't have a business model that can sustain us through a 12-month difficult time, then there is fundamentally something wrong with the business model. So we've not reduced any of our workforce, we've not reduced any of our salaries, and we continue to fight in this difficult time along with the rest of the industry in the world. Besides the overall view that I've given you on Oriental Aromatics, and I'm sure in the 1.5 hours we'll dwell on it more. We're very proud as an organization that we give back to the community also. And I always have told my 1,600 member team that a crisis does not build character, it reveals character. And we run a school for charity for children with learning disabilities in Chembur in Mumbai, called the Gateway School of Mumbai, which is part of our CSR program. And it's run professionally along with my wife, who is the founder of the school, which has 92 students today. And it brings us immense pleasure to continue to support it. Anuj, I think I've given a broad overview, and I'm sure that there will be lots of questions where I would be able to go into micro with the team.
Absolutely, Dharmil. Thank you so much for that.
Pleasure.
Let me move on to Shyamal. Shyamal, if you could, educate our participants about the overall aroma chemical and flavors and fragrance industry, that would be fantastic.
Thanks, Anuj, for your question, and good afternoon to everyone. So picking up from where my brother left, to give you an overall view of our industry, I will be speaking about all the 4 verticals that we deal in: fragrances, flavors, generic and specialty aroma chemicals, and lastly, camphor. So for you to understand the overall business, the global fragrance and flavor business is top-heavy industry, where the largest 5-6 players contribute to a significant percentage of market share. It is more of a 80-20, 70-30 principle. So these top 6 companies have a very significant percentage of the global fragrance and flavor business. They in turn work very closely with the top large FMGC companies globally and in India. The mid-size and small-size FMGC companies are all serviced either by these larger players, but mainly by other small and mid-sized fragrance and flavor companies that are spread all over the world, just like we are in India. So a large part of our growth as a fragrance and flavor business comes from our customers and their ability to sell FMGC products to the end consumers. So we only really sell our fragrances and flavors if our customers are able to sell their finished goods. And our success really depends on them. Since we are in the business of providing our customers with a sensory experience, the ability to offer value to a customer is determined on the ability of the fragrance and flavor company to create these experiences. In functional perfumery, these notes are created by using both synthetic and natural aroma ingredients. Therefore, we feel that full integration is key to delivering value in the fragrance and flavor space. And to give you a brief outline of the camphor market globally and in India, the camphor space globally is divided on application, primarily into the religious space and also across healthcare and pharmaceuticals. There are a few players globally who produce camphor, but we at Oriental Aromatics do the full downstream of all alpha pinene products. And we are one of the few companies that has a US FDA approved plant, and our camphor is WHO GMP certified as well. So Anuj, that's just to give you a brief note on our four verticals.
Thanks, Shamal. That was very informative. So moving on, let me request Mr. Parag Satoskar. Paragji, if you could give us, a brief overview on OL's different business verticals. I think it's been touched upon already. If you could dwell a little bit more deeper into that, and also, there's a lot of different kinds of chemistries that the company works on. So if you could highlight, give us some insights into that, and the kind of key raw materials that we use at these in our facilities as well, and the manufacturing capabilities of the same of our company. I'll just ask you to unmute. Yeah, there you go.
Sure. Yeah. Thanks, Anuj, for the question. Wow, this is a long one. Good afternoon, everybody. And Anuj, I would like to answer this question by first talking about the four verticals that, as you rightly said, Dharmil has touched upon in terms of the infrastructure that we offer on each of these verticals. I would then like to talk a little bit about our raw material sourcing strategy. And finally, I would like to touch upon the questions on chemistry and try to probably answer it in as non-technical way as possible. We would have probably loved Anita, who's our head of R&D, to answer this question, but I'll probably make an attempt to do it.
I'm sure you'll do justice. Please go ahead.
Thank you. So, as Dharmil has explained, OA operates out of four verticals. We are active in fragrances, in flavors. We are active in generic specialty aroma ingredients or aroma chemicals, as we call it. And we are also active in camphor and all the ancillary products which are derived from the camphor stream. So first, to talk about the fragrance and flavor verticals of our business, these two verticals, we cater or service our customers in India as well as outside India through our manufacturing site, which is located at Ambernath MIDC, which is close to Mumbai. This site has the manufacturing capabilities currently, or is producing around 2,500 metric tons of fragrances and flavors annually. And at this capacity, we can say that we are currently at around 50% of the max capacity of the plant. Moving on to our chemicals vertical, I'm very glad to say that Oriental Aromatics has a land bank of close to 100 acres, which is available for chemical manufacturing. This is a very, very significant point for the current status as well as going forward. In our chemical vertical, this particular land bank is primarily divided into two manufacturing sites, as Dharmil has touched upon it. One is located at the Nandesari GIDC in Baroda, which is in the state of Gujarat. And the other manufacturing site is located at Bareilly, which is in the north of the country. So coming to our Gujarat Nandesari site, that is primarily the site where we do a lot of our generic as well as specialty aroma ingredients manufacturing. And if you look at this site primarily has currently 3 manufacturing plants inside it, because we work on a modular kind of a model. So the first plant that we have is a fully automated single product plant where we produce 3,500 metric tons of a musk smelling chemical, which we called as Astromusk. The second plant that we have at this Baroda site is a plant where we produce 700 metric tons of certain specialty aroma ingredients, which are sandal odorants, and we call it the sandal alcohol plant. And the third plant that we have in this site is our newest plant, is a fully automated DCS controlled, probably one of its kind in the world in our space, a multi-purpose plant which has the ability to, using this automated techniques, make a basket of between 150 to 180 different products. A lot of them either mid value, mid volume, or some of them extremely high value and low volume. So I think this particular plant probably gives us a very unique ability to really transform the aroma ingredients landscape that we operate in, and is going to be a key element of our story going forward. I would now like to move on to our Bareilly site, where we, like I said, that in the Bareilly site, we produce close to 3,500 tons of camphor. And in all, we produce around, between both these sites, we produce around 12,000 metric tons of different chemicals. So if you look at both these sites today, and if you look at the land bank of 100 acres, Anuj, we are currently at around 60% occupancy of the available land bank that we have. And we are very aggressively pushing forward expansion program in our current sites in the form of either a brownfield project where we are expanding capacity in our current plants, or certain greenfield projects like Dharmil has touched upon in his earlier call, where we are putting up some special facilities for doing hydrogenations in a multi-purpose fashion. So, we have a very aggressive and a well-defined program to really utilize the land bank that we have. And we are also in a very advanced stage in acquiring additional land in Maharashtra, which is going to probably be available for future expansion. So, with this, I would probably try to end my piece on the description of the verticals and our infrastructure. And I would like to now move on to the second part of my question, where I'm going to talk a little bit about the raw materials. If you look at Oriental Aromatics, and with this wide range of specialty aroma ingredients that we produce, and the raw materials that we need for our fragrance and flavor compounding, I think we have a very, very well diversified RM base, where on one side we buy huge amounts of alpha pinene for our camphor and all the ancillary products. And on the other hand, we also have to buy a lot of other raw materials which are based on various other routes like naphtha, crude, castor, etc., etc. On the fragrance and flavor side, like I said, that we have a huge repertoire of more than 2,000 ingredients that we buy. So across the board, I would say that, and I would like to generalize that we have a very, very strong, sustainable, and a well thought out and a de-risk strategy when it comes to buying our raw materials. I think certain elements like, a global de-risking of a particular raw material, or moving from a single source raw material to a multiple source raw material, I think these are things which our teams have been probably talking since 2015. A China de-risking strategy has been a very key element of our buying strategy since the 2015s and the 16s. I mean, just to give you an example, as late as 2016, close to 95% of the alpha pinene that we used to consume in our Bareilly plant used to come from China. And, if you look at calendar year, say 2019 or 2020, whatever we have got, I think it's less than 4% to be precise. So, I think a lot of, and for us, raw material buying, it's something which is an ongoing process, and it's not just left to our supply chain team or to our purchasing team, but I think the whole think tank, including the senior management, regularly are meeting and kind of understanding what are the opportunities, what are the challenges, on the raw material front, which really has kind of helped us to be ahead of the curve. And probably when GK or when Girish will talk about the numbers, I mean, some of the reasons why we could kind of beat the market in terms of getting a better raw material price or getting a lower raw material price but getting a higher finished good price is because of this ability to think a little ahead of the curve. So I think with this, I would like to kind of end my chat on the raw material sourcing part. And I would now like to probably address the last question, which is kind of related to chemistry. As Shamal said, that we are in the business of selling sensory experience. And so if you want to kind of summarize sensory experiences, it is primarily your ability to really create these experiences, and you can create these only by different aroma ingredients. And these different aroma ingredients will probably need different chemistries. So I think for us, the last time I checked, we are commercially producing aroma ingredients using 21 different chemistries in our factories. So that's something which is very unique, which is very different, but is also again an ongoing process. And that's where I think the R&D center, which at Powai and the team there, I think plays a very, very critical piece in our growth strategy, because they are the ones who are working on newer products. They are the ones who are working on newer chemistries. They are the ones who are working on how to make sustainable by having an environmental program attached to the R&D. They are the ones who are working on developing fragrance delivery systems, which are a key input for our fragrance and flavor division. So I think all in all put together, I think it's these chemistries, it's the focus on R&D, it's the ability to really move quickly from R&D to commercial. It's the ability also to really do the right product selection. I mean, thanks to our fragrance and flavor team, we are able to get the right briefs from them as to what to produce, what quantities to produce. And so when we are ready with the product, we really don't have to go and search for customers. I think the customers are already identified as to where we can go and sell them. So I think these are some of the points which I wanted to touch upon. I hope I've answered your question correctly.
That was very elaborate and helpful. Thank you so much, Paragji. I already see that there are at least 25 questions, so I'm going to try to be a bit quick about this. Shamal, going back to you, if you can quickly touch upon the client profile, marketing initiatives, basically, what's our reach and how does a company like OL differentiate versus other domestic, as you rightly said, the big guys who command 70% of the industry. How do we compete against them?
So Anuj, with regards to our client profile, I think we deal with almost all the major large FMGC players for national product launches that are sold pan-India. I'm sure many of the participants on this call would know them. They are all household names. That said, we also supply to mid-sized family-owned and managed businesses who are in the FMGC space. We are actively involved with creating fragrances and flavors for their various products, may it be soaps or detergents or, well, very recently also disinfectants. On the aroma chemical side, Oriental Aromatics has a global reach in its key and is a key supplier to almost every major fragrance compounder in the world, may they be big or small. In our business, it's kind of unique because our competition is also our customer. We also buy from each other and we also compete with everyone on the final products. On the aroma chemical side, Oriental Aromatics has a global reach. And we have a very, very strong network of distributors for our aroma chemicals, so that the materials that Parag mentioned that we do produce are in fact available at stock points around the world. And with regards to camphor, we have a very predominant position in the pharmaceutical market globally, as we supply medical grade camphor to several lead players. And of course, the religious space in India that accounts for a large portion of our domestic sales. So we sometimes internally joke in the company that in good times people pray and in bad times they pray even more. So that works out for us. And in terms of positioning, I think we are in a unique position because for a company our size, we are in fact one of world's fully integrated fragrance, flavor, and aroma chemical companies, thereby allowing us to deliver real value to our customers, and pretty much like a one-stop shop for all their requirements.
Thanks, Shamal. That was helpful. Kiriji, coming to you, last year the margins improved marginally, but our profit improved significantly. Our balance sheet got deleveraged considerably while generating also very good cash flows. Could you quickly highlight us on what were the primary drivers of this? How were we able to manage this? You're just, if you could unmute. Kirishi, there we go.
Yes, thank you, Anuj. Good afternoon, all. Any discussion on the revenue growth is incomplete without looking the growth from 2017-18 to 2018-19, and then we will discuss 2020. In the financial year 17-18, revenue from operations was rupees 506 crore, and it grown to rupees 755 crore in the financial year 2018-19. Major driver for this growth was pricing. As in the year 2018, raw material prices has gone up by 10 to 100%, or in some cases even 400%. In this scenario, we were able to pass on the increased RM cost to the customers, which resulted into the higher revenue and the higher profitability in the year 2018-19. In 2018-19, our MPP plant commenced production, which also contributed in the revenue. In the year 2019, RM prices started coming down, and also sales prices started reducing. But the sales prices has not reduced in the ratio of raw material prices, which resulted the better margin in the year 2019-20. Here I want to highlight that in spite of reduction in selling price, we are able to achieve the better revenue due to the optimization of capacity of our MPP plant. In the year 2019-20, the company witnessed better demand for specialty aroma chemicals and able to cater the same, which resulted in the higher volume. As you all know, our revenue from operations as on financial year 2019-20 stood at 760 crore, slightly higher than the last year. EBITDA stood at rupees 126 crore, higher by 9.9%. EBITDA margins at 16.63%, and last year was 15.2%. Profit after tax stood at 86.2 crore, higher by 51%. Profit after tax margins at 11.34%, and last year was 7.57%. Our focus is to sustain the EBITDA in the range of 15 to 17% and business growth by keeping the cost controls and increasing volume with better margins. On the balance sheet front, for the year ended 31st March 2020, we witnessed strong cash flow generation. Our cash flow from operations stood at rupees 181 crore, owing to improvement in the working capital cycle and better profitability. This enabled the company to reduce its net debt by rupees 135 crore to rupees 51 crore. We reduced our debt considerably even after the payment of dividend of rupees 14 crore and a capex of 10 crore in the last financial year. Our debt equity ratio as on 31st March 2020 improved to 0.11 from 0.47 last financial year. Our return on equity as on 31st March 2020 stood at 18.57%, which is higher by 3.9% against last financial year end. We are able to maintain the ROCE at 23%. During the year, we also reduced our raw material inventory days and receivables days by 30 and 5 days respectively, which resulted into the reduction in working capital. I hope I have given you summarized growth drivers with the financial performance. Anuj?
Thanks, Giriji. That was
Thank
helpful. Dharmil, I see I have almost 50 questions now, and I'm not, I'm sure, but this final question, I'm sure I see a few people asking it already. Last question from my side. What's your vision for the company and future growth strategy, probably also on the expansion plans that you could touch upon?
So very quickly, I mean, look, I think the team has covered most of it. What I'd like to say in terms of what the vision of the company is, as my brother Shamal stated that, you know, the FMCG space, I know he's been calling it FMGC. I guess he's a little bit unnerved as it's his first time. So Shamal, I'm correcting that for you. It's FMCG. I know you know it. I think what is happening, as he said, the growth in the FMCG clients that we cater to, both the multinationals, the regional players, the family-owned and managed businesses, to control that growth depends on the success of the consumer product. If we fragrance a soap, for example, and the soap or the sanitizer does well, we grow. That portion of our business is very difficult for us to control the growth. What we could do in that space is continue to give quality products at extremely attractive prices and well-researched products, and have wins in different organizations that we deal with. Where we see the vision of Oriental Aromatics over the next 1,000 days is primarily in the specialty generic aroma chemical space. This space, as I explained to you, there are multiple thousand materials that we use. Because of this vast palette and because of our robust 4 to 7% spending on R&D, and with a very talented head of R&D and a battery of several PhDs and chemists working out of our Powai lab, I think we are able to turn out these generic aroma chemicals very quickly from lab to commercial. I think that the multi-purpose plant that we have put in place has been a huge, huge experience for us, because we took the model of Aerofine, which was, say, 100, and we have expanded that 8-fold. So from 100, we've expanded it from 100 tons. We've expanded it to 800 tons. I think this motivates us. It gives us a lot of confidence that the strategy of the generic aroma chemical space is working. And, you know, I was just talking to Girish out of curiosity. I asked him, so who are our 3 top customers? You know, I'm sure this question would come up. So he said, you know, it's surprising, but today we have all our customers in the large, in terms of volume and value, in the specialty aroma chemical space and in the camphor. So primarily Makhtashi Magan, IFF, and Divine Camphor for our camphor. These would contribute to our 3 large customers. So in terms of vision, we are going to stay completely on course in consolidating and expanding and growing our position in our camphor and derivatives business. And our focus is going to be on the specialty generic aroma chemical space. All materials that we produce will be off patent, because we respect the patents of, like my brother said, the giants that are operating, the billion-dollar-plus companies. And while we do this, the advantage of this huge basket of materials that we have, very silently we are passing on to the fragrance and flavor business, making us more competitive there. So the growth and the expansion will come in the areas I've mentioned. And I'd also like to say under the present government's Magnetic Maharashtra, the future expansion that we propose to do will be in Maharashtra. We are very close to finalizing a land, and we have the products, we have the plant designs, everything ready to go. And we would kickstart this expansion very, very soon.
Thanks, Dharmil. Just to follow up on that, and in fact, just for the sake of some of the new listeners and viewers, sure. What is this expansion plan in terms of quantifying? You know, you already mentioned the products. Sure. What is our outlay of capex?
So what, you know, as we mentioned even in our earnings call, I think we're looking at about a 200 to 250 crore capex spread over 1,000 days. There would be multiple plants again, because this business will require larger molecules, even if they are mid-value or high-value, to have their own standalone plants. And there would probably be a multi-purpose plant too, because of the success that we've seen in the plant that we built in Baroda after the acquisition. And like Parag mentioned, the 250 crores that we plan to, the capex that we plan to do does not include the 60 crore plus 60 to 70 crore capex that we are doing in 2021 with a very unique hydrogenation capability and with expanding the current reactor sizes in our multi-purpose plant. So many of our investors who are listening in and have been following us since 2008 and always complaining that we don't come out and we don't do investor relationships with relations. So we have you there for us. And we feel today as an organization, the story that we are saying is not really a story. It's what we believe in. It's a guidance. It's what we think we can achieve. And the reason we are confident to come out today is because of our track record from 2008 till 2020. It's taken us 12 years and a very planned and meticulous 12 years to be actually speaking to our investors at this scale.
Great, thank you, Dharmil. So let me take a few questions, actually a lot of them now. First question from Rahul Jain. I think you already answered his first question, but the second question is, we have guided for about 15% growth per annum over the next few years on an average. So obviously correcting him, it's not a guidance, it's your targets that you've been saying. Vadodara expansion will give us about 70-80 crores of revenue, while the new greenfield capex will take around 2 to 3 years for completion. So what will drive the growth for us, since we are already operating at near optimum capacities currently? So
Anuj, it's not, good afternoon, Rahul, and thank you for your question. So Rahul, it's not really going to take us 2 to 3 years. That's not how this business works. And that's why we don't run Oriental Aromatics quarter to quarter. How it works is the 60 crore expansion in hydrogenation and expanded reactors that we are putting in place. We will start seeing revenues from that being generated. You know, I always push Parag to get it done as of yesterday, but I think we should see in the first quarter of next year product coming out of those expansions. And even in the 250 crore capex that we are planning, it's not going to happen at one shot. So in the chemical business, we will start building all the plants at a time. Fortunately, the mix that we've chosen, some of the products we already manufacture in other sites, which we are expanding, and there will be new products that we are bringing up. So you will see the growth coming from the capex ongoing. It's not like we'll have a 3-year silence in terms of growth and then suddenly there'll be an explosion. The growth will come. It will come in phases. And I also believe that the optimization of our yields in some of the products that we currently make and what we are going to do in the future is going to, even in these difficult times, going to show us not growth, but getting closer and closer to what we did last year in terms of revenue and in EBITDA. Great. A quick follow-up from him is, do we still have room for expansion in at Baroda post completion of existing capex, or will that then be at optimal? Are we going to be done with Baroda? So I think in both Bareilly and Baroda, we still have a land bank. As Parag said, there's only 60% utilization of that land bank. And of course, you all would ask, then why Maharashtra? But the reason we've done Maharashtra is because we need to de-risk our business and we need to have a sustainable model in place. To answer the specific question, yes, absolutely. There is available land in Vadodara after this expansion of the hydrogenation and expanded reactor capacity. And I'm sure with the robust R&D pipeline that we have, we are going to put further products even in the existing Vadodara facility. The challenge is building of the utilities. So the utilities is what we will have to look at first. And across the board, I think in all our 3 plants, we will soon go to ZLD. And in the new expansion from day one, of course. Okay. There's a question from Mr. Deepak Garodia. Can we get a breakup of sales of camphor and margins for the same? And what's the outlook for camphor? Girish, you want to take that in terms of breakup or Parag? You're still on mute, Parag.
So primarily, I think, we see that the outlook on camphor seems to be very, very strong. Even today, I mean, we are continuously in touch with the market just to understand what happens currently and what happens in the long term. I think even in the current testing times where most of the temples are shut down, I think the demand seems to be still very, very strong. And go by what Shamal said, that, camphor is one product which people use in happy times, but in sad times, they use it even more. So I think on the demand side, on the demand seems to be very strong. And I don't think I'll be probably able to talk about margins very, very specifically, but I can say that we see relative stability on the raw material pricing side on camphor. And we also see a good demand for camphor going forward. So, we see this overall as a product which still seems to be stable in the next 6 to 8 months.
And we stand by what we've said in terms of 15 to 17% EBITDA across the board, whether it's the fragrance, flavor, specialty, generic aroma chemicals, or camphor.
Okay. There's a question from Prasanjit Bhaiya. Can one particular aroma, this is an interesting question, maybe Parag ji, you could take this over. Can one particular aroma chemicals be manufactured from different chemistries, like benign-based aroma chemicals be manufactured using petrochem or vice versa? Is that possible?
Well, so I think next time, Anuj, we have these calls, let's have Anita on board. It will be easier to really get some very interesting insights. But probably we'll try to answer this question that yes, I mean, theoretically speaking, it's a chemical reaction. So it's going to be A plus B in giving you C plus D, where C is the product that you want. There can be multiple ways of doing it. However, how many of these ways are commercially viable? That is something which needs to be always explored. So, from an academic perspective, you can probably look at how you can create alpha-pinene in some bomb reactor and produce using petro raw materials. But when you have millions of pine trees in Brazil, which are being tapped on a regular basis and is now considered as a more sustainable way than crude. If you look at the sustainability score, I think alpha-pinene is more sustainable than crude. Then why really, go the hard way is what.
Interesting. So his follow-up on that is then, which I think you've answered, but then if yes, then companies having the raw material sourcing will be at advantage versus companies with source building blocks externally. Any comment on that?
So I think, sorry.
You want to take that, Parag?
No, Dharmil, if I leave out something, then you probably can add up.
Sure, go ahead.
I think this is a question which a lot of our buyers keep asking us, that every single kilo of alpha-pinene that you actually consume in your plants is imported, and you still stay a very competitive player in the world. So I think globally and historically, there is a lot of importance which is given to the length of the supply chain or the effectiveness. I think, yes, it is important, but it's a combination of a lot of factors which ensures commercial viability and long-term sustainability in a product. So, it's not just being close to an alpha-pinene source, but if you look at how we source alpha-pinene from every single manufacturing point in the world, how do we most efficiently convert it into our plant is what is the key.
Correct. And I think, Anuj, it's not as simple as being close to the source. It's also very important to understand the front end of the business, which is the fragrance and flavor business. And we've always said that the main two streams are the pinene stream and the petro stream. In the pinene stream, not only do you have the ability to do camphor and its related products, but then you also have the ability with alpha-pinene to do the sandal alcohols. And we are very active in the sandal alcohol space. So I think it's got a lot to do with an overall understanding of the business. And most importantly, being in the business of senses, it's very important to understand the odor, the application. So just because you are close to the source, that doesn't mean that you could go and make all the downstream products. And when you look at petrochemical companies from whom we buy crude-based materials from large naphtha cracker plants for our musks, I think it's not a business that they are necessarily, I wouldn't say interested, but it's not their focus business.
Interesting point. One of the questions that's come up, and this is a question from Mr. Jayesh Parekh. He says that Reliance is apparently coming up with a very large specialty chemical business where they also plan to get into aromas, flavors, and fragrance. Are you aware about this?
I have not heard of it. I have not heard of it.
So this is the first time I heard about it. And if that's true, do you think that they would get into this business?
I can't comment on it.
If they do get into this business, how do you think it's going to impact OL or just the general industry?
I mean, to answer that, to be honest, one would have to understand what stream they are going to produce, what materials they are going to manufacture. As I mentioned, it's a very large palette. You know, I think there are over 5,500 to 6,000 materials for everybody to make, and the world currently makes them. Out of this, there are about 100, 150 which are mid-sized molecules, and there would be 20 to 40 which are the large-sized molecules. And when you look at a large and a mid-molecule number of about 250 or 300, you're looking at so many other smaller molecules which are from 1 kilo to 25 tons. So I think what would be interesting to see, and I can't comment on what they are doing, but it would be interesting to see over a period of time if they do decide to come, in what materials they would come.
But that's exactly the point, and just to not take this any further, but Reliance has never produced any products which is not scalable or, is in the billions of, volumes or dollars. Do you think that they would even enter this business? Is this large enough for them?
Anuj, I can't answer for them.
Okay, moving on. Also on the raw. Let's move on. Raw material sourcing. What's the India international split? This is a question from Dhruv Bimrajka. And what is the sourcing from China, if any? I think you already answered. Sourcing from China is very minuscule today. But India international raw material sourcing, percentage-wise breakup, any answer?
So our imported raw materials are close to around 60% in terms of value, and local raw materials are around 40%.
Got it. So this is okay. Moving on, how does the product portfolio compare with Privi and other competitors with which use CST as a route of manufacture? What is the advantage and disadvantage of that, if you want to talk about that?
So I think, with the number of players that we are in the aroma chemical space and then in the specialty generic aroma chemical space, I think so far with companies like Privi, we don't seem to have an overlap of products, so we don't really compete because there's so much out there for everybody to make and profit from. So even though that they have their CST capabilities and they do produce several other high volume, low to mid value materials, we don't overlap in chemistries with them.
Got it. There's a question from Mr. Deepan Narayan. Raw material prices since 2019 have fallen. How much of it gets passed on to customers? Do we benefit more from the up or down cycle of raw material price movements? And where are we getting the pricing power even after getting significant falls? So any questions on these raw material volatilities? Does it impact us? How do we pass it on?
I think like any business, I mean, there is volatility in raw materials. And in most cases, yes, we do pass it on. It affects us like it affects any other business. If your costs go up, your selling prices need to correct accordingly. And we are able to pass it on. We believe, and having seen what's going on in these days, that Camphor continues to be a recession-proof and a COVID-proof business. And we seem to have been able to continue to not only achieve the volumes, but also pass on whatever incremental costs that may have been there.
Okay. Another question is, Shyamal, maybe you can take this. You talked about, our growth being in tandem with FMCG companies to a large extent. So how do we plan on deleveraging this from an industry, and can we ever deleverage it from, from FMCG, or find, maybe other partnerships that would help us get the next level of growth, or are we always going to be in tandem to such?
No, I think, Anuj, we're always going to be pretty much in tandem with our customers, because the situation, the situation is such that the fragrances, flavors, aroma chemicals, whether whatever the product and the application may be, it is directly related to the end consumer, and whether they are buying it, whether they like the products, whether the FMCG companies are able to sell, because if they can't sell, we can't sell. I mean, and we are a B2B business, we're not a B2C. So I think the dependency will always be there.
Great. This is also a very interesting question, and Dharmil, you talked about, and I think Shyamal also talked about the large, guys who control a significant percentage of the industry. So this is a question from Shekhar Yadav. How can the market share be captured from these larger players?
So look, when you say market share, you're talking about three parts. You're talking about the fragrance, flavor, and the generic specialty aroma chemicals part. In the fragrance and flavor part, yes, like the auto business or several other business, when FMCG companies globalized, they took with them their suppliers. This continues to happen as they continue to operate in the country, and all the large flavor and fragrance companies today have manufacturing facilities in India, and they cater not only to the FMCG global players who they are following all over the world, but they also cater to the regional players. As far as we are concerned, today we export our fragrances and flavors to over 60 countries. We see a lot of growth opportunities. It's very segmented. There are a lot of family-owned and managed businesses. There are a lot of regional players across countries that are not necessarily tied to the large flavor and fragrance companies. And then there are a lot of mid-sized companies. There are companies that, who have the entrepreneurial skill, like we've seen with a fantastic company, which I admire a lot personally, is Vinny Products, the gentleman that makes the fog deodorants. And he's you've seen his growth numbers and how he's captured market space and how he's competed with the FMCG companies and given them, a tough time in that space. So like him, there are several regional players, several models of the same business across the world where we are very, very active, very active.
Got it.
And I think this space will continue to grow for us.
Got it. There's a question from Dubirex. Could you elaborate a bit about the FNF molecules? Is there an IP concept in that? If so, who owns the intellectual properties?
Right. So absolutely, there is an IP concept. And that's why earlier in this call, I did say that, Oriental Aromatics does not infringe patents of companies. This is not how we run our business. We are extremely ethical, and we will never do this. And of course, we are very transparent with the companies that we supply to, because most of them are the inventors of the molecule. So I mentioned in this call that IFF is one of our largest customers. And we have a musk plant which is producing a musk which was invented by IFF, but it competes with IFF. And we have a sandal alcohol plant, which was again sandal alcohol. The ones we produce were invented by IFF, but we supply to them. So IP is definitely something Oriental Aromatics respects. Once it's off patent, it's available for us to produce. And it's a very incestual business in the sense that we buy from the large FNF companies from their aroma chemical division, and we supply to their aroma chemical division. So we pick and choose our battles on what kind of chemistries and molecules we want to do. But once off patent, it's open for all to make.
Got it. Next question we have is from Rukun Tarachandani. How are the contracts and products priced? Is it based on a formula incorporating raw material prices, cost plus? How does this work? just a quick brief on that.
I'm sorry, what was the question again?
How are the contracts priced with your customers? How
Right.
are the products priced? How do you decide the formula? Is it incorporating raw material prices? How is that?
So Parag, do you want to answer this? Because I don't think, except for one customer and one product, we ever work on a cost plus model.
Yeah. Yeah. So I think most of our contracts primarily are, I mean, wherever we get into contracts, those are primarily contracts which are spread over a 6 months period and which also get reviewed every quarter. So we don't get into extremely long-term contracts, A, and B, also, I mean, we don't have contracts which are either driven with a cost plus model or where we put the raw material cost and then we get the selling price at the end. So we don't work that.
So how do you price the product then?
Well, we have a multiple pricing strategy, and I don't think, I mean, so that's something which is something which you know is
Yeah, so
unique
Parag,
to every company.
Maybe I'll elaborate it. On the fragrance and flavor verticals, we work with the margins that we decide depending on the pricing that we get from the FMCG company. So normally they turn around and tell you we're going to launch a soap and we want a fragrance which is 5,000 rupees per ton. So it's 500 rupees at 1%. So we backward calculate and work it out where we keep our EBITDA margins intact. So this is how it works on the fragrance and flavor side, where the product that the customer wants to buy from us, in most cases, they give you a range of price that they want it in. Whether they're like launching an ice cream or a biscuit or a soap or a sanitizer or a deodorant, etc., they will give you a range. So you can't just go in blind and tell them, okay, you're launching a new deodorant and here's a 5,000 rupee per kilo fragrance. It won't work in their costing. So they drive the selling price for us when we submit on the fragrance and flavor side. When it comes to camphor, it's an open market. It's relatively a commodity material, and the different manufacturers in the world compete with each other. And based on the raw material prices of alpha pinene, the Chinese price, and how the market demand is, we determine the price. Now on the generic specialty aroma chemicals, there the pricing gets very, very interesting because, you know, going back to your earlier question, there are so many molecules in play, and the generic aroma specialty chemicals already are selling in the market. So if it is a chemical A, we know chemical A is off patent and it is at, say, 14,000 rupees a kilo. So we already have a benchmark price to work with. Based on our R&D, our process, our yields, we arrive at a cost. Based on that cost, we decide what our selling price should be to compete with the inventor or the other players besides the inventor who are already in the available market.
Got it.
So pricing in fragrances and flavors is largely determined by the customer. In the camphor is determined by the market space. And in the specialty generic aroma chemicals, it's already an established price. It's not an invented molecule where we are going to go and sell a patented material to a FNF company to use it. We haven't got to that stage and we don't plan to go down that road because we feel it's too early for an Indian organization like us to get into the patented molecule game. Now, does that mean we won't create molecules which are then patented by us to use for our own internal consumption? Absolutely, we would.
Got it. On that also, you know, would you be able to give a client concentration? You know, what is our, you know, mix of top 5, 10 customers in terms of revenue?
Right. So I did mention the top 3. The top 3 we mentioned. Girish, what would the revenue contribution from the top 3 be?
Around 250 crore.
250 crores.
Yeah.
Okay.
And largely in that 250 crores is Divine Camphor, which distributes camphor for Oriental Aromatics nationally. So as much as it sounds like a big number, in our total revenue, the Divine Camphor number is completely controlled by us, which I think would be close to, how many crores is the Divine Camphor number in our mix, Girish?
Around 120 crore. Somewhere.
Correct. And I think the other 100 crores
will.
on the Agan business, where we have collaborated with them, where they buy back all the musk that we manufacture, and then they sell it, and we have a partnership and a profit sharing in that. So in the 250 crores, I'd say about 180 crores would come from 2 of these customers. And these are knitted in agreements. These are knitted in agreements with at least Maktashim, Agan, and IFF for AX number of years. So it's not a business that we need to look at every year or every quarter. The only thing we look at is the pricing.
And the rest of the revenues, how many customers would that be broken up into?
Close to 2,000.
Oh.
Close to 2,000 across, Parag, how many countries?
33 countries.
33, yeah.
33.
Yeah.
Okay. So I think this question has come probably, a lot of these are.
So I just want to stand corrected on the 60 countries that I mentioned. I didn't have that exact number.
Sure.
Yeah.
So this question, I think a lot of people are probably new to the company. Girish, if you could quickly just give a breakup of our 3 divisions, aroma, flavors and fragrance, and camphor, or, just the mix people want to get a revenue mix of.
Yeah, I think we mentioned this in our earnings call, but Girish, you can give it if you have the transcript of that, or if you know it.
It is the same as we discussed in the earnings call. Our flavor and fragrances is around 30-35%, and camphor and allied products are 30%. Remaining is specialty aroma chemicals.
Okay,
correct.
And I think it is that particular segment where we stand focused as an organization. It is that 30-35% that we want to take to the next level. And also, if you look at when we acquired camphor in 2008, we had a 90% dependency on alpha-pinene based products. Today, that 90% dependency on alpha-pinene products is almost below 20%.
Got it.
So our product mix is increasing.
A few questions on camphor. Are we the lowest cost producers? Is there a key differentiating factor between us to be such a significant player? And what's our market share in the camphor market?
I think in India, we have about a 33% market share. Parag, you want to step in or you want me to take it?
So, in terms of the market share, we are looking at between 35 to 40% in India.
Got it.
And on the pharma camphor segment, which is kind of sold globally, we have a substantial share because we are one of the few US FDA approved and WHO GMP certified camphor.
And what about cost differentiations, which was the second part?
Correct. So I think coming to cost differentiator or whether we are the most effective, I think we always look at our costs and we always look at our selling prices and whether we are making money on that. Having said that, I think a very unique raw material buying strategy, which is a little different than a lot of the other players in India and China, gives us a better understanding and gives us a better control on how we can keep our costs in check. And that, along with a good process, a very efficient process, a well-tested process, because we were the first ones to make camphor in India. And I think we have a program which is called as continuous process reengineering, where we are looking at all our current molecules through a micro lens and new technology lens every 2-3 years, has kind of helped us to really be ahead of the field, because everybody else has come after us and they kind of are always doing the catch-up. So these 3-4 factors put together probably give us an edge in terms of the camphor.
If I can also add there, if I can also add there on the alpha-pinene, we make the entire gamut from alpha-pinene, not only just the camphor, but the isobonial acetate, terpineol acetate. So we kind of really take out the whole juice.
And the sandal alcohols.
And well, yes, of course, and the sandal alcohol. So we kind of really take out the whole juice of the alpha-pinene that we import, which I don't think everybody else is doing.
Got it. Guys, we are running out of time. I have another 10 minutes, but we have about 70-80 questions. So to the participants, I'm going to try to cover as many as possible, and there are a lot of repetitive questions. So obviously I have to filter through this, but in interest of time, if there are more, we are always here to help. Moving on, on the R&D front, Dharmil, if you could shed a little bit light on this, maybe what is our, so the question is from Nikhil. He's asking what is our percentage of sales for R&D? How is this, how is the sales team break up between each of the segments also?
I didn't understand the second part.
About the sales team, how do we have a different sales team, different distribution team for the different segments?
Right. So hi Nikhil, thank you for your question. As a company, we are obsessed with R&D. We are very passionate about R&D. We would like to allocate as much money as we can towards R&D, and we currently have a 4 to 7% spend on R&D across flavors, fragrances, aroma chemicals, and what Parag mentioned, which is the continuous process re-engineering. We will continue to have this spend on R&D as it's required in especially the specialty chemical business. And I am hoping that, I can just continue to give more and more to research, because it really is the backbone of Oriental Aromatics. And we are very big believers in that. In terms of your question, in terms of sales team, absolutely. And, who better than our Parag to answer how many salespeople and how he has segmented it and how many different markets he operates in. He's lucky his chemical sales teams is much smaller, but his fragrance and flavor team is pretty vast. So Parag, you want to just give a quick overview?
Sure. So I think, like Dharmil rightly said, that we have completely separate teams which manage the chemicals and the camphor and the ancillary products and the fragrance and flavor. So on the fragrance and flavor side, when it comes to the India team, we have a very nice structure where we have the vice president fragrances, and then we have a few key account managers who handle the key accounts. And then we have a field force of close to 13 salespeople who are kind of reaching each and every probably fragrance selling outlet that is there in the country, right? From Guwahati in Assam to probably Madurai in Kerala. So
and a similar structure in distribution we have across different parts of Asia, Pacific, correct, Middle East, Africa.
Correct. So I think when it comes to the global team on the fragrance side, like Dharmil rightly said, that we have certain key account managers who have been assigned countries. And when they kind of take care of the countries, they have probably two briefs. One is to go and directly knock on the doors of the customers who can import directly, and then to develop a supply chain or a local distribution network, which will ensure that the fragrances that we manufacture reach the smaller and very smaller players in those countries. So that's on the fragrance and flavor side. On the chemical side of the business, we have a more focused team where it's a 5-member team, and where we have divided them based on markets, based on customers, based on geographies, and we all work together with a common aim where we are continuously evolving. We are evaluating data. I mean, data is a very, very key element in the whole structure. So
yeah, so data and R&D are the two buzzwords in Oriental Aromatics.
Got it. Next question is from Rohit Nagraj. How many new products were developed and commercialized in the last 3 to 5 years in R&D? How does the pipeline look like now?
In the fragrance and flavors, the R&D products that are developed run into thousands, because every customer would have a submission, would want twists on it, would want variations on it. So the fragrance and flavor R&D is very robust because it's a formulation blending based business. So that is, we currently have close to 25,000 different flavors and fragrances that we are actively selling across India and the world. On the chemical side, Parag, the floor is yours. How many products have we got out?
Well, if you look at the last 3 to 5 years, I think the whole MPP multi-purpose plant range would probably get added to the product mix. So if you look at actives at any given times post 2015, we are looking at a product mix of between 35 to 40 different aroma ingredients that have been added, and the ability to produce another 125 or 130 if and when needed using campaigns in our multi-purpose. So that's kind
already
of
exist.
Correct, already existing. I think in terms of the, sorry.
No, and just to answer, also we have a very active plan where we want to launch a minimum of maybe 10 to 12 different materials, some very high technology, some very mid technology materials, which we will continue to do on a regular basis. So I think very shortly we would be launching 3 new molecules, I think as early as mid of next month.
Got it. Let me take this question from Mr. Suhas Naik. Because we have so many customers due to COVID-19, have we seen any disruption? Are we expecting any bad debt issues? How are your customers going through in this time?
So fortunately, we are not expecting any bad debt issues. Yes, in the FMCG space, there has been certain industries which have taken a hit. I mean, you hear of soaps and sanitizers, etc., doing well. But when you look at the fine fragrance segment, there is definitely a deodorant segment. There is definitely a hit. If people don't go out, they don't need to apply a fragrance, I guess. So yeah, across different FMCG companies, there is a peak and valley situation. On the flavor side, the confectioneries, the biscuits, stuff like that is growing. But I'm sure that there are other segments which have also been affected in that area. On the chemical side, fortunately, the product mix that we make is not affected, and camphor is definitely not affected.
Got it. I still see that there are 70, 80 questions. Wow. I'm going to try to look at some of the broad ones. Any fundraising, equity fundraising plans? I think this needs to be clarified. Maybe people think that we're doing this because you have an agenda. So please clarify that.
Right. So I'll take that one. There is no agenda. There is absolutely no plan for equity fundraising. All our expansion will be done with internal accruals and debt. We are not looking for any kind of equity financing in our business.
I think, on the debt front also, you mentioned that you'll expand, you will do this through, I think there was a little bit of confusion in the earnings call that you're going to take up debt to fund the expansion. Are you more debt, if you have the cash flow like you had last year, would you rather take debt or and keep the cash, or would you, let me just clarify it, that if you have the cash, you'll just utilize that first?
We'll utilize that. We will put internal accruals. For us is important. So yes, we will put all our profits back into the business.
Good. One of the questions from Neeraj Mansinka is how are you comfortable with the EBITDA margin of 15 to 17% range? Do you think it can go back to earlier days of 12, 13%? Is that a possibility today?
I mean, look, this is, a crystal ball question. We hope it doesn't go back to 12 to 13. I think adding the specialty chemicals and the new products that we are launching, which are low volume, high value products, will help keep the EBITDA where it is, which is 15 to 17. And we are also seeing a China +1, +2, +3 strategy in our business, where the large FMCG companies are driving the large FNF companies to split their geographical risk across materials that they are buying from China. And I think this is going to help countries and companies like us and India, of course, and we'll have to see, because in the region, besides India, I know Malaysia has some big plants, but those are again bulk plants that manufacture large volume materials. But a company like ours, which has the multi-purpose capability, there are a few and far between.
And for the clarity on this expansion, do we have the visibility from our client portfolio that we are doing this expansion? Are we confident that we'll be able to utilize our plants to optimum levels, as we expand them?
Yes, we are 100% confident that we will be able to utilize the plants.
And another follow-up on that is, somebody is asking whether we can do kind of contract manufacturing, and do we have any kind of clients that have expressed into these new expansions where we are going to sign up with certain clients and dedicate anything for them?
Right. So it's public information that we do contract manufacturing for IFF for their sandal alcohols, and we produce close to 700 tons for them. And cost plus and doing this contract manufacturing is not really fitting into the ideology of the organization today, because we are looking at playing a high value, low volume game with a lot of materials which require a lot of R&D effort, and that R&D effort eventually has to be paid for. So if there are profitable opportunities of contract manufacturing, we'll take it on, or we won't.
Thanks, Dharmil. One last question I'm going to take from Swarnabha Mukherjee from Edelweiss. What are the entry barriers to the business? And what are the competitive advantages of OL? I think you already covered that, but also the follow-up on that is, if any application of one particular product increases, is it a possibility that larger players may enter, like Reliance, in it, or a customer may backward integrate? If you can just touch upon that question.
So look, if you look at the global industry, I mean, this is a very, very specialized business. I mean, it's an industry which requires a lot of, it's not a large plants and large volumes and large, it's very specialized by the virtue of having such a large palette of materials. And I don't know whether large organizations, and I won't speak for them, at the level of the companies that are being mentioned in this call, would really be interested in producing a 30-ton molecule a year. But a company like mine would be, because that 30-ton molecule at $160 a kilo makes it a very interesting specialty aroma ingredient. So look, even if other large petrochemical giants or the others that are being mentioned come in, I think there will be room for everybody. It cannot be polarized to just one player.
Got it. Dharmil, thank you so much. Just, sorry, I cut you off. Is there anything else on that?
No, that's it. That's it.
Okay. So just the last few words from your side to the panel, to all the participants today, or as a closing comment, if you have any.
I just feel that, we've waited very long to reach out to our investor community. We're very comfortable in this space and now reaching out to you all, because I think in the last 12 years, we've established some kind of a track record. And for all forward-looking thoughts that our investors have, I think it's best to see our past performance and try and envision with what we are trying to do, where we could be as a company going forward. And I feel extremely confident of the specialty chemical space. And I really look forward to growing Oriental Aromatics to, a company that is recognized in the world of specialty aroma chemicals.
Fantastic, Dharmil. Thank you, Shamal. Thank you, Girish. And thank you, Paragji.
Thank you.
It's been very helpful.
Very much.
We are going to have to continue this because clearly there are way too many questions. But for the participants, we'll be doing a Q1 con call in the next month itself. So hope to see you there, and we'll continue these interactions with everyone. Thank you, everybody, for participating.
Thank you so much, Anuj, and thank you, everyone, for participating.
Thanks.
Thank you.
Thank you.